What's up, everyone? It's Caddy with Money Vesting. So if you guys can see me and hear me, just give me a thumbs up. We've got about 5 minutes for the PPI numbers to come out. I'm sorry I'm late. I was just working on something else. But thank you so much for joining. If you guys can see me, hear me, just give me a thumbs up. We are all good to go. In about 5 minutes, we're going to get those numbers. I'm going to share the link in our Discord as well to get us started. The markets are definitely pushing higher. So we are right now doing really well. We'll see if this rally continues going into this print. So 5 minutes to PPI. Live now, all set, perfect. All right, let's do this. Let's see where we are at. Awesome. So, all right, perfect. So PPI numbers in about 4 minutes now. QQQ is up over 1.5%. We got the SPY up over 1%. The Dow Jones is pushing up over 0.5%. The yields are coming down, and the dollar is coming down as well. So we're seeing both the dollar index, which is the DXY, coming down over 0.67%. So definitely falling a little bit down to 106. And the US 10-year yields also selling off. So these were two of the three things that we talked about over the weekend. So 3 items that we were focusing on: the dollar index, the yields, and the volatility. The dollar and the yields coming down, and the volatility also has been obviously much lower from just a few months ago. Obviously, it was trading at well over 35. It has been crushed all the way down to 23.5, and we'll see if it continues to pull back even further. Lots of stocks are pushing through here. Amazon's up 3%, Apple's up over 1.5%, AMD's up over 3%, Tesla's up over 1.6%. So we are seeing some momentum here for a lot of individual names. And again, PPI numbers are going to be coming out in about a couple minutes here. This right here are going to be the expectations. So market's expecting month-over-month increase 0.5%. And year-over-year, we're expecting 8.3%. So number to stabilize. That's also something that I mentioned in our Discord, that the expectations on a month-over-month basis are really going to be high at 0.5%. That's been the same thing for CPI as well. But year-over-year, we're going to see a little bit of stabilization for the numbers to come down to 8.3% from 8.5%. And then ex-food and energy, which is the core PPI, we're expecting 0.4% month-over-month, and year-over-year to come down to 7.2%. And excluding food, energy, and trade services, month-over-month at 0.4%. So I'm going to do a little bit of an audio check. If you guys can hear this, just let me know and give me a thumbs up.
Things like Bitcoin, they're promoting the decline of civilization.
Now, this was a conversation that took place yesterday morning. I also asked Munger about China and President Biden's meeting with Xi Jinping. Munger, as you probably know, has been a long-term proponent of a strong economic relationship between the United States and China.
Well, it's very interesting to have Biden meeting with the...
Perfect. So we are ready. We're ready in about 1 minute 30 seconds to see what those numbers look like. And again, it's going to be a market moving event. It usually is, but not as aggressive as what the CPI numbers are. CPI numbers are usually the bigger catalyst for the markets. We already got those last Thursday, and markets were absolutely ripping higher, like 7%, 7.5% was just insane. So, we'll see what those numbers end up being in about a minute here, and the market's reaction to that as well. So, they're talking about Biden and Xi Jinping and Charlie Munger with a minute left for PPI. Like, they can do this later. Let's go. So I'm going to reload this page as soon as the numbers come out at around 8:30 a.m. Eastern. So in about a few seconds here. Yes, so we'll talk a little bit about Walmart and Home Depot and a lot of these companies that reported earnings here shortly, after we kind of go through the PPI numbers. So after the PPI numbers, I'll kind of run through all the earnings, and then we'll talk a little bit about some individual companies that you guys want me to go over. So lots of them are actually pushing higher, right? Walmart, Home Depot, they've been pushing through really, really well. So anyway, 15 seconds. All right, I'm going to play this now, and I'm going to shut up.
He turns 99. Are we going to be done by 9:15 for his next
Busy man.
meeting?
Busy man. Love it.
By the way, folks, you can get the full comments of all of this. Eventually, it's going to be posted on our daily podcast. That full interview with Charlie Munger, you just go to Squawk Pod. You can follow it on Apple Podcasts or Spotify. Wherever you listen, you can just tune in.
Okay, we are just seconds now away from a new look at producer price index numbers. Take a look at futures right now. We're going to show you that we're in the green. after a couple of earnings reports coming in. 208 on the Dow up. NASDAQ looking to open about 197, but 198 points higher, and the S&P 500 up about 44 points higher. Rick Santelli standing by at the CME in Chicago. Rick, the numbers, sir.
Well, let's start out with Empire. Empire's November number expecting -6, much better than expected, up 4.5, up 4.5. Up 4.5 actually is the first positive number since July. And in July, it was well above. It was 11.1, so that's nice. Here we go. Our October read on Producer Price Index month over month, up 0.2%, half of what was expected. Remember, the high water mark for all the metrics I'm about to give was in March of this year. High water mark there, 1.7%. Now, if we look at ex-food and energy, zero. We're expecting up 0.3, 0. And this, by far, is maybe one of the bigger surprises. Up 1.3 in March was the high water mark. If you strip out on a monthly basis, food, energy, now one more trade, it's up 0.2. We're expecting up 0.3. High water mark there in March was up 1%. All right, the year-over-year numbers, in my opinion, the most important. Year-over-year headline up 8%. That is 0.3 less than the 8.3 we were expecting. It's a 0.5% less than the 8.5 in the rear view mirror, and 11.7 was the high water mark. Strip out food and energy, it's up 6.7%. That's a 0.5% below expectations. It's a 0.5% below our last look at 7.2, and it's well under 9.7%. 3 percentage points was the high water mark in March. And finally, the last year-over-year ex-food, ex-trade, and ex-energy up 5.4%. We're expecting up 5.6 in the rearview mirror, 5.6. 5.4, of course, high water mark there was 7.1. We are seeing some light revisions trickle in. I should highlight them. On the headline number, up 0.4 last month, now gets cut in half to up 0.2, which really, in a way, shouldn't take anything away from this month. It should just spread it out more aggressively. If we take core, it was up 0.3. It's now only up 0.2. The rest of the revisions aren't that big a deal, actually. And if we look at what's going on with regard to yields, well, we're at 377, approaching 3 3/4 on a 10-year. It's now down 8 basis points. It's at a 1.5-month low. Should it close here? And as we look at the dollar index, which continues to fall, it is basically at a 3-month low if it was to close here. And it is on the move as we speak. These yields should drop. And anybody who's making the case, hold on, this doesn't mean the Fed's going to change course, doesn't mean the Fed's going to pivot. You know what? There is a world outside the Fed, and there are a world of facts that are probably outside the Fed's mind because nobody knows the future. In the end, it's about what was priced into the markets, what now is being repriced into the markets, and the fact that on CPI last week we ended up with one of the strongest stock rallies in history isn't lost on investors who seem to be lining up today to have a repeat performance. Andrew.
Okay, Rick, stay with us. I want to bring in Neela Richardson. She's the ADP chief economist. Our own senior economics reporter, Steve Leisman. Steve, I want to go to you first. Your take, sir.
So think about this battle against inflation like a WWE match, right? Where a guy's down on the floor and the ref starts counting 1, 2, and then he gets up. He goes 1, 2, and then he gets up. We finally got one down, okay? Not only do we have the better than expected CPI number, we now have together with that a better than expected PPI or wholesale number, which means the Fed can start counting. What do I mean by that? The Fed has said it wants to see several months in a row of improving inflation numbers. And this is a good number from the following standpoint. I'll give you 3 reasons here. First, we have this trade decline, which is the margins of wholesalers and retailers, and that suggests some easing of pressure when it comes to the supply chain. The same with transportation and warehousing. That was negative. You had a big bump. The reason why the headline was even as high as it was this 2.7% increase in energy prices. We had a bump up in energy prices in October. It looks like they have been stable, at least in November. So that's probably going to go away. Another reason why this is a flattering report is you look up the chain to the processed goods for intermediate demand. They also moved down. They were negative. So getting a little disinflation into the system here, it certainly has an appearance right now. Wholesale prices can pass along to consumer prices. The question now becomes, will those on the consumer front pass along lower prices or at least ease the price gains that have been out there. This is a start, Andrew. It's not the beginning. It's just the start.
Steve,
not the end.
You do know WWE is like fake, right? I mean,
no.
You mean like a boxing match where someone goes down and one, two, and then he, right? I mean,
You're not going to tell me about Santa next, are you, Joe?
Uh-oh, there may be kids. Kids like the
Joe.
Sorry.
What are you talking about?
Okay.
All right, anyway, so wow. What's some great numbers here? So PPI month over month only going up 0.2% versus 0.5%. We had the year-over-year numbers not only come down to 8.3, but 8%, which is, dramatically lower than what the expectations were and where we were same time last month. But what's a bigger change is ex-food and energy, month over month, core inflation, no change, 0.0%, like literally no change. And food and energy, when you take them out on a year-over-year basis, a core inflation on a PPI basis, expectations were 7.2. We actually came in 50 basis points lower than what the expectations were at 6.7%, so under 7%. And ex-food, energy, and trade services only going up 0.2%, and we also came down 5 points. So like literally on all 6 fronts, on all 6 accounts, inflation came in much better than what the expectations were. Much better, like not just a little better, but a lot better than what the expectations were on all 6 accounts. Inflation, of course, interest rate expectations are still pegged for 50 basis points right now. This is the entire report. So again, 0.2% increase in October. And of course, 8%. You can see how well it's kind of rotated back down. We kind of peaked back in May, June for PPI numbers. In fact, actually, we peaked back in March. So did for CPI as well. We peaked around those levels, and now we've come down, leveled off down to 8%. And market's reaction is nothing but positive right now. The QQQs are up over 3%. At the moment, we do have the S&P 500 ETF now up almost 2%, over $403. And of course, we got the Dow Jones pushing up over 1.2. Amazon's up over almost 5%. Tesla's up over 4.5%. We got Apple up 2.86. AMD's up almost 5%. The yields are coming down. That's another big tailwind for equities because we talked about the yields and the dollar index. If those two things start dropping down even further, that's going to be a big tailwind for equities, right? So, and they're both coming down. Yields are down 2.36% for the week. They're down another 2%, and the dollar index is down over almost 1% right now. And on the day, it's down a little bit over 1.4. So, lots of momentum coming in. Volatility is still down close to 2%. So, very, very strong moves for the markets. It's kind of like a repeat of Thursday, right? So, what we got on Thursday, LAB is up over 7.5%, so a very strong move. Square's up over 5.8, so getting up to $74, $75. PayPal is up over 4%. And then let's take a look at Home Depot. Slightly flat, slightly down. They did report earnings, and then Walmart is also, Walmart's up almost 8% now, getting up to that next resistance in the 149, 150 levels. Wow. So very, very strong PPI numbers coming in. And, trade services, some of the other services, ex-food and energy kind of rolling over. So Marion says, why is pushing? What is the information? So PPI numbers, producer price index came out. So past few days saved my financials life. Thought I was going rogue just a week ago. Yeah, that's how the markets work, David. This is, crazy how from Thursday till now, we've just seen such a significant move to the upside for the markets overall, and just incredible move to the upside for the markets right now. So yeah, so that's where we are, and we'll see if this momentum kind of carries forward throughout the day. And what's really interesting is that if you have the SPY right now up almost 2%, the implied open for the market for this S&P is going to be at around 4,038, right? So we're definitely breaching above 4,000. We're almost getting up to 4,100. So I want to be very clear that yes, the PPI numbers were good. Yes, the CPI numbers were great. This still doesn't take away from the fact that we're approaching a very strong resistance for the market, right? So S&P 500 certainly getting up to 4,078, anywhere between 4,050 to 4,100 is going to be a big battleground between the bulls and the bears, right? So right now, sure, we're seeing a lot of bulls step in, and the expectations for pivot has only gotten stronger today after Thursday's CPI report. Today was a PPI, so much better report, and we're markets now starting to really anticipate the Fed is going to start to slow down, inflation's rolling over, this is actually happening, but we gotta pay attention to where the technicals are, and that is to suggest that the S&P 500 has a resistance at 4,100, sitting inside sort of like that circle, and we're almost getting up to that level. Same thing with the Nasdaq. You know, the implied open right now is 3% in the green, so we're gonna open at around 11,500. So if this momentum kind of carries forward this week, we've got, you know, 500 points that we could cover. There's still some room. There's still some legs here left for the markets in my view. But as soon as we get up to those levels, like 12,000 on the Nasdaq and 4,100 on the S&P, that's where I think we need to be a little bit more careful on the long side, because that's a very strong resistance from a technical standpoint for the markets. We'll be testing our 200 SMA, and we'll be testing our lower highs as well. So, you know, that's going to be a big battleground between the bulls and the bears. Jeremy Siegel is about to be on in a minute, so okay, we'll just listen in on what he has to say, if he is actually talking. So we'll just check him out for a very quick minute and see what he has to say here. Okay, so as soon as he comes live, we'll see if there's anything interesting that he's talking about. But nonetheless, inflation expectations right now are still pegged for 50 basis points going into the December meeting, which again happens in now under 30 days. 29 days and 4 hours. So the FOMC is going to be, again, you know, front and center. That's going to be the one big catalyst to look out for going into December. So we are pretty much done for the month of October. I don't think there's anything else that's coming out. Sure, there's going to be retail sales that are going to be important later this week, consumer sentiment, and maybe the GDP numbers later this month. But earnings season are starting to kind of wind down a little bit. And then now all the catalysts are going to be pushed back to December. That's when new inflation numbers, new unemployment numbers, new Fed meeting, everything's kind of scheduled. The main events are scheduled for December now moving forward. So we're still pegged for 50 in December, and now we're pegged for 25, which is actually really interesting. This might be one of the reasons why the markets are also pushing up, because now we're pegged for 54% probability for 4.5 to 4.75% as a federal funds rate. And if you do some comparisons, right, if you try to understand, you know, where we were versus where we are, if you take a look at over here, so the least sort of like, these color shades are so crazy, but the lightest blue color is 1 month ago, and the darkest blue is the current expectations from the market. So as we go down the shade, it's also going down in time, right? So like this is 1 month, this is 1 week, this is 1 day, and this is the most current. So what this shows us is simply the expectations. Like if you take a look at where we were 1 month ago, like October 14th, the expectation for a 50 basis point was 29% versus an expectation for a 75 basis points was 70%, right? So we were pretty much tilted towards a 75 basis point hike 1 month ago. And you'll notice how this thing has changed. The expectation for 75 basis point has come down to now under 15%, and the expectation for, or the market's anticipation of a 50 basis points has dramatically gone up to over 85%. So this is what the market's pricing in, and this is for the December meeting. If you go over to February, you'll notice a very, very similar thing, right? So now 25 basis points is what is actually getting priced in from the markets in a more major way, because 1 month ago, the majority was for another 50 basis points, right, to get us to 4.75 to 5%. So there was a 54% probability, more than half of the market was expecting, like the Fed funds futures would be anticipating that we're going to see another 50 basis points. All right, let me see if Jeremy Siegel is actually on. All right, let's listen.
The Fed rhetoric, you know, higher for longer, it really would guarantee a recession. I think this moves up the pivot. All we need is for them to recognize what prices on the ground are actually doing, and they are not going up. And the Fed can say, I mean, they're probably going to go 50 basis points, but that should be the absolute pause. You know, if I were there, I would say you could pause right now. But I think the day of recognition is sooner.
You know, Jeremy, you could say that Jay Powell is crazy like a fox, though, in a way, because it's nicer to let the markets do things for you than you doing it to yourself. Maybe you don't have to go as far. So on that day when he said, maybe we're going to slow down the pace, and the markets took off. You remember that day? Yeah. And then he felt the need at that point to say, well, we now have a higher terminal rate. He just did that because he doesn't want the wealth effect of the market to make his job harder. So do you at least give him credit for doing that, or do you think that was a mistake? He should just say what he means.
Well, I think I think the pendulum has swung too far. They way underestimated inflation for so long, and it's like, hey, I got religion. Oh, all right, now I just got to fight it no matter what. I mean,
no, I agree.
Yeah, and I don't want to be blamed on the other side, and I think he has to face the facts on the ground. Yeah, I was shocked at the news conference that followed the September meeting when he said, I think now we have to be more aggressive. The November meeting than we were in the September meeting when the data was actually so much more favorable, and I think that really, during his news. The market went up on the statement, and then during the news conference, it all went down. My God, what is he thinking? But I mean, it's a matter of time. I was also, as I mentioned before, very surprised he was confronted with the fact that there are two housing indexes, one that's forward-looking and one is backward-looking. Basically, he said, yeah, and I like the backward-looking one better. I kind of said, oh my God.
I've been talking. I have used your name in vain a lot in the last 3 weeks or so. Not in vain, but I don't know whether your ears were burning, but I sort of thought, I felt a lot of empathy for your position on this. And I don't think, you pointed out that M2 was out of control, but you also pointed out it totally stopped. And here's, so I'll give you credit for that. It crashed. But here's the thing. So we got this rail strike looming again. You're talking about prices on, shelter and housing and maybe raw commodities, but we still got a real problem in the labor market. So Neela, the ADP economist, just said, yeah, this is a good data point, but it's going to rear its ugly head again, and we can't take our eye off the ball, and it's not the time to pivot. So you're still going to hear that a lot, and that may be right.
Well, I think there's too much emphasis here on the labor market. First of all, workers are trying to catch up. When we get that CPI data, we get what's happened to the real wage. It's down 3% or 4%. Workers have been falling behind. They're just trying to catch up. It's hard for me to think that is cost push inflation when wages have gone up less than inflation. And Powell himself, for several years said, we're going to bury the Phillips curve. We don't see the relationship between that unemployment and inflation like we did in the 50s and 60s. And all of a sudden he seems to have resurrected the Phillips curve and said, oh my God, the labor market is too tight. The JOLTS market was just as tight a year ago when he was saying that inflation was temporary as it is now when he says, oh, that's a real problem. All of a sudden the Fed is so focused on the wages, I don't think, and in fact, a few words, if you listen to his saying, said, yeah, I'm not so sure the wages are the problem. And then he went back to saying the JOLTS are, real strong. And I didn't know where he stood at that on that matter. It vacillated back and forth.
So do you think that the 10-year is seen the highs?
Yeah.
Sure.
I think right now, anything could happen. It could go above. Anything could happen. Washington could beat the Eagles. Anything could happen. It could go above 4%. It could go above 4%. I do not think it will. I think we've seen the highs of the 10-year.
Do you think technicians, Jeremy, are going to revise their almost dogmatic view that this is a bear market rally? Does it matter? Does it matter for you whether it's a bear market rally if a year from now we're back in a secular bull? Does it matter if we go down and I guess you don't think we're going to test the 3,600 lows again or 3,550 lows on the S&P?
I don't, because I think that I've often described this market as it's like coiled up, just waiting for that Fed to say, all right, I do actually see, that inflation has, been solved. And, as you pointed out, the money supply, the last 6 months has been the biggest 6-month decline in M2 in history, or well, let's say since World War II, 75 years. And it was the biggest increase in history in 2020, and now they slammed on the brakes. The biggest decrease. Well, I didn't think that's the way to run monetary policy. It is what it is. But they put on the screws, and look at what happened to the dollar. Look what happened to commodity prices. Now we're beginning to see it on the ground in actual prices. The Fed will come to that realization.
You seem to be a lot of exceptions to a lot of rules. You seem to be like an academic that actually knows what's going on in the real world. I don't know how to interpret that, Jeremy.
I've always loved the markets, and I've always tried to understand it. And when I got my degree,
I just assume you're going to be wrong.
I teach the markets and the theory at the same time.
Amazing.
And try to.
Well, lots of great points. Obviously, you can already tell. I mean, he's been voicing the concern for inflation being, inflation coming down, right? So inflation obviously has been on the camp that inflation's been coming down. Underlying inflation is rolling over, and the Federal Reserve is obviously overdoing it. So that is something that, he said that obviously once again, and the Federal Reserve is overdoing it, and eventually they will come to the conclusion that they need to pivot. He also mentioned that if it were up to him, he'd already be pivoted. Like he'd already be, pausing interest rates, because there will be still a recession going into next year if obviously they keep raising rates. And the most important thing, I think that's something that's going to make the news probably after this interview from CNBC, is the 10-year yields have peaked, according to Jeremy Siegel, which is a very big statement because, the 10-year yields have peaked, and if they start rolling over, well, that's a big indicator to where equities might end up, and which is, higher if yields keep coming lower, because that just creates these valuations, creates an environment for valuations to expand once again because of the lower discount rates and the hurdle rates that people will be using, investors will be using in their own models if the yields are indeed peaked and they're coming down. So, and of course, talking a little bit about 1970s and 80s during the Great Inflation, the 10-year yields actually did, when they peaked, the markets actually ended up bottoming out. So, very, very interesting comments from Jeremy Siegel here. But, going over to the markets again, very strong move. We'll see if this momentum kind of carries forward. We'll see if we can actually sustain this rally intraday, just like we did on Thursday, just like we did on Friday when the CPI numbers came out. And what's really critical for the markets right now is a new high of day, right? If we actually get this big green candle and we start kind of slowly and steadily kind of rolling over, that's not going to be great. But if we actually do see a new high of day for the S&P, for the NASDAQ, that's going to create that more momentum to the upside, and that's going to lead to some more potential upside during the day. But a new high of day is really important for this momentum to carry forward for the market. So 295 for the QQQs, SPY 402, actually 404. Those are some levels to pay attention to here intraday. So, okay, I got a couple questions that were really interesting that I wanted to go over. First one was about valuation. So a good question, is earnings compression still going to be a problem for valuations? And that's a great question. I think it could be, because if there is, well, it really depends now on the Federal Reserve, right? What do they end up doing going into the December and February meeting, right? So I think that's really what's going to be important, because if they keep raising rates, that's going to put additional impact on the economy, and consumer spending will inherently slow down, it will come down, and that will affect earnings. If they actually make a decision to, raise rates doing it at a much lower than previously expected hike, in other words, if they go from 75 to 50 to 25, then there's still an opportunity that, look, earnings are still going to be hurt, they're still going to get affected, but not as much as what we were previously expecting. So valuations, obviously, if interest rates do pause and they do start cutting eventually, if inflation comes down, valuations can expand, the multiples can expand. But in this environment, since we did overshoot to the downside, a lot of names were trading at such incredibly low valuations. For example, AMD, right? 5% higher, 1.6% higher yesterday. And last week, I think it was higher, like double digits. So if you come over to how much it was up last week it was up 16%, right? So a very strong move to the upside, because valuation multiples was really, really low for advanced micro devices, right? So it's pushing higher, and I think it does deserve some momentum to the upside, considering how low the valuations were for AMD to begin with. So But if the earnings do deteriorate at a much more severe rate, like if you do see declines coming in fourth quarter, first quarter, second quarter next year, then there is a possibility that we do see valuations get affected once again. Because if earnings come down and prices stay stable or go higher, well, guess what? The P multiples are going to go up at a much faster rate, right? Because the earnings, which is the denominator, is going down, and the prices, which is the P, is going up. So you've got both of those working in opposite directions, resulting in P multiples who absolutely explode to the upside. So this is going to leave more room for potential downside for equities. But of course, if interest rates, pause or pivot or cuts, then that's, result in earnings not going down as much as what we were expecting. So this right here, again, were the expectations as I was going over earlier. This is for a February meeting. This is not for December. December we already covered before the interview from Jeremy Siegel. But you can just see how the expectations have really, really pivoted. Like markets' anticipation of interest rate hikes have really pivoted very aggressively over the last 1 month. And like I said, 1 month ago, there was a 54% probability for us to see a 50 basis points. And now after today, it is crazy. We're only expecting a 25 basis point hike going into February. Like we're expecting 50 in December and then 25 in February. Like we're not even expecting to get up to 5% until March. Before, the probability was 5% at the end of December, and now the probability is 5% by the end of March. So we just got pushed back like 3 months in terms of the anticipation of interest rates, in terms of rate hikes from the Federal Reserve. And this is the market anticipating again. Is this going to end well for us? We're going to find out very soon. I mean, the market's been disappointed quite a few times in these anticipations. I mean, we've tried to expect a pivot all year long, which is obviously didn't come through, and the markets kept rolling over. Is this time going to be any different? We'll find out, because this is what happens, right? The market starts anticipating a pivot, and then the Federal Reserve throws the water on our rally, throws cold water on this rally, and then we start to roll right back down, and markets sell off pretty aggressively. But we'll find out if this is something very similar, or if we're going to see some actual breakouts this time around. All right, let's see here. I smell a rug pull. Smart money going short, Johnny says. So again, we'll find out soon enough. I think the technical setup is still very much pointing to a little bit of a resistance getting up to 4,100 on the S&P and the NASDAQ. As soon as we get up to 12,000, I think we need to be more alert for long trades as soon as we get up to those levels. The dollar's coming down, the yields are coming down. They're obviously putting some more upwards pressure on equities. But in order for this rally to continue, for this momentum to really follow through, we need to see some high of days for all three indices. If that happens, then I think this momentum can carry forward today and later this week. But if you do see the rally kind of roll over, if you see prices come down, then obviously there's going to be some profit taken there. Yeah, TSMC is liking the Buffett effect. I think TSMC, wow, 12%. Wow, this is crazy, 12%. This is incredible. Like at this point, he doesn't even need to pick the right stocks. He just needs to buy any stock, and then as soon as the news comes out that he's in it, the stock just ends up rallying on his news. Like he's just got that, brand power at this point. Like his name is enough for a company, you know what I mean? But TSMC kind of feels like the right candidate, right? So I did a video on TSMC yesterday, but this seems like the perfect candidate for a company that Warren Buffett might be interested in, right? So we analyzed everything, like literally everything from a fundamental standpoint for the company. So make sure that you do check out that video if you haven't already. But shares outstanding going down, pretty much been stable over the last 10 years. Solid free cash flows, stable free cash flows, excellent balance sheet, good revenue and earnings growth. And then valuation's really, really low, right? So it's got Warren Buffett written all over it, pretty much. That's what it's all about, right? So it makes a lot of sense. Occidental didn't make a lot of sense because of the balance sheet. I think that was a bit of an issue, but they have done a really good job in kind of paying down their debt because of the free cash flows they're generating because of the higher oil prices in all of 2022. So they've gotten into a much better position this year. So, and free cash flows have been just insane. But TSMC, it's got all the check marks hit perfectly. I think the only element of risk was the geopolitical risk that I mentioned with China and Taiwan, right? So that's the only thing that would worry me about TSMC from a more geopolitical standpoint. And of course, it's got a dividend yield as well, almost 2%. All right, so Lauren says got some TSMC at $61. That's fantastic. That's great. Congratulations. I bought TSMC big at $62. Ferdinand says, wow, that's incredible. Ferdinand, congratulations. Matt says that I missed the bottom. So Matt, nobody really knows, man. I'm sorry if I, obviously nobody has a crystal ball. And bottoms, the thing about bottoms is that, well, first of all, in my view, I think, it's really not worth the time and effort in trying to predict bottoms because, like I said, nobody knows, right? We won't find out until it's already happened, right? So most of the times you'll never know until it's already taken place. So it's always going to be hindsight 2020 for bottoms. That's a fact. So that's something that we really need to kind of understand. I think a much better way to look at it is what is the risk reward opportunities for companies and for stocks at certain levels, right? So for example, for AMD in the low 50s, the risk reward is very compelling, right, at those levels because the valuation's low, it's a high growth company, great balance sheet, great free cash flow, great management. So the risk reward is really good. Same thing, I can make a case and I can argue for Tesla too. Like in the 170s, I think the risk reward is really compelling. It's already dropped close to 60% from all-time highs. Management's good, right? So Elon Musk, balance sheet's fantastic, good revenue and earnings growth, lots of demand for the vehicles that they're selling. So risk reward very compelling. So I think that's a much better way of looking at it instead of just kind of pinpointing to a bottom and trying to get in at the exact bottom and just kind of stressing over that because it's never going to happen, right? We're never going to be able to time the bottom or time the top. Instead, what we're looking for is optimal entry points, optimal exit points. How can we be more efficient in the markets by making sure that we're taking advantage of good risk reward opportunities and not really stressing over exactly where the bottom or the top is. Okay, so 61 is good, crazy how they got around the same level. AMD was my swing. Yeah, so TSMC definitely, I think low 60s was this insane price. So XBI here pushing up 2.3%, so getting a little bit of momentum. So I did share a trade idea in our Discord, so everybody who is part of it, just so you can go over to trade ideas, kind of check out what the risk reward ratios are, the targets, the stop loss, all those things kind of in more detail is going to be mentioned in our trade idea channel. And then LEBU obviously pushing up over 6%, almost 7%. Right now back a little bit over $8.28 right now. So we'll see how this ends up. And SOXL, I did exit a lot earlier, man. This is just crazy. I exited in the $12 range. It's still pushing. And Kevin, if you're watching this, and there you are, man, your calls are going to absolutely print today. It's up 13%, to $14.42. Seems like SOXS is really breaking above this trend line. And this is a very, very key moment for semiconductors. Like, if you take a look at this overall trend, right? So SOXX definitely got up to this resistance, and it's now starting to break out of this level, right? So obviously my mistake was getting out at that resistance, because we're getting up to that resistance. So obviously the idea would be RSI MACD overbought a little bit, but obviously you can't get that right every time. And this time around, we actually did get a breakout for SOXX, up another 4%, getting up to $390. So very nice move to the upside. We'll see if it actually does carry forward. And the next resistance to really be paying attention to for this one is going to be 423, right? This is the next sort of previous high for this company. Okay, so let's see. If you buy every new 52-week low, you can time the bottom. Yes, that's true. Eventually you will, right? Obviously, if you're buying every single 52-week low, eventually there will be a time that you will be able to time the bottom, considering that's a stock which is actually has a value, right? It actually is a company that's going to go higher. It's not like something like Wish.com where it's just making 52-week low every single day. Like if you did that strategy here, Kevin, oh man, you would be in for some serious, like, because you're just getting 52-week lows every single day, every single week, right? So since January of 21, the stock's down over 98%. So it has to obviously make sense for the company, right? And yeah, so that's really important. But anyway, so markets starting to go sideways a little bit. This is going to be SPY just trading sideways. So is QQQ. So is the Dow Jones. So one of the good things is that we're not aggressively selling off right away. Apple's consolidating sideways. Tesla is one that's rolling over. It got up to as much as 199. And right now we're just coming down to 196, 197. So Shai is asking SPY to 410 today. Let's see. Again, that's going to be the resistance that we have already talked about. 410. Well, 412 is the resistance, right? That's the target that we're watching right now at 401. 410. Another 2%. What do you guys think? I want to hear from you, all the people. We got over 500 people watching. So, what do you guys think? Like 410 for SPY, another 2% intraday move. That's going to put us at a little bit over 3.5% for the day, which, if you go back to Thursday's rally on CPI, we pretty much rallied, 5%? Or I think 6%, 6.5% after the CPI print. It's possible. It's possible, like another 2% is possible. Especially consider, we also have some Fed members talking, right? So that's something to pay attention to as well. It's possible, but, a little bit lower probability, I would say. Because, like I said, PPI is important. It's not as important as CPI. CPI, we definitely got some huge moves. I think the only way that would be likely is if the yields and the dollar index start dropping even more. Like, for example, if the yields drop by over 2.5%, closer to 3%, if you actually do see some selling pressure and TLT starts pushing higher, which is the bond prices, which is at 1% right now, if you actually do see some momentum for bonds and the yields start coming down and the dollar index start rolling over as well, right now it's down 1%. If it actually starts rolling over more, then I think it's possible that the S&P 500 starts to push up to 410, closer to those levels, and pushes up to 2 to 3%. But yeah, it really depends on the yields and, of course, the dollar index, if you do see some downward momentum there. But throughout this week, I think it's possible, and this is going to be the most important trend line. I think many people are going to be watching this very closely and to see whether we get a breakout or another rejection for the SPY at around these levels, right? So 410 to 412 is the one to watch. And same thing with QQQs as we are approaching some of these levels at around, I would say, like 304 to as high as 305. Like 304, 305 are going to be some levels to watch for QQQs. All right, so we got about 20 minutes left for the markets to open here. Thank you for your input. I really appreciate it. Thank you, Shah. I was glad I was able to help. So, all right, so let's just do our poll. I don't think we've done that yet. Let's just do that. And also make sure that you guys drop a like. Really appreciate that. 107 likes right now. I'm sure we can get up to at least over 300. And let's see, markets today should be an easier one, but you never know with these types of markets. There's been so much volatility. So red, green, and flat. And make sure that you do vote. We'll do it. We'll see what everybody's thinking today. And we'll take a look at the CME watch tool just to make sure that the Fed interest rate hikes are kind of pegged at what we were looking at earlier.
In a controlled way. It's not that they're immediately buckling. So Walmart obviously doing what it's managed to do for a long time, which
also,
is preserve those margins.
It's hard to put the pandemic into context, but on a 3-year stack, Home Depot comps up 37. Yeah. On a 3-year stack, Walmart's comps up 26. Yeah. I mean, the world of shopping changed in the last 3 years.
The entire top line of the economy got so big, so fast because of stimulus and inflation that I think you're capturing a lot of that. Even, I know it's not that huge a part of the mix, but Sam's Club had great comps on that time period as well. So yeah, I think that there's been this sense out there that there has to be a payback for that. On the good side, you're seeing people overconsumed during the pandemic, but in absolute dollars, it's not really declining very much for the biggest players. And I think that's one of the themes too, is investors kind of migrating back to the core, to the bigger franchises. We'll see what it means for Target tomorrow as well.
Walmart, of course, continues to be the largest grocer in the country as well, something to keep in mind. And they do point out that at 3/4.
It's crazy how Walmart gapped down after earnings, and then it also left the same gap on the way up. Like this right here is just never gonna fail. Like this is kind of like this feels like a Bermuda Triangle for Walmart. It's just like there's the price is just never gonna go there. It just gapped. It just left on the gap down. It's left on the gap up, and it's just gonna stay there like 140s to as much as 145. So we'll see if Walmart actually does come down to retest this level. But we are selling off pre-market, so we actually got up to as much as 149, 150. So look at that resistance, tagging that level, and right now we're just kind of selling off here. We're pulling right back down in the 146. So it was actually higher, up a little bit over 12%, but right now just coming down to only being up 5% here. Michael says, looks like you got the bottom on Tesla. I was still waiting to 170 for 177, which was my target. Well, it's too early to say. Tesla's at 197 right now. I wouldn't call that the bottom by any means. I mean, obviously the lower price that it got down to was 177. Man, if you missed it by 12 cents, man, come on. Don't tell me you actually had a limit buy order at 177 and Tesla only traded down to 177.12. Like, did you actually miss it by 12 cents? That would be like really, really unfortunate if you actually did miss it. So consumer expectations for inflation are up again. The Fed will probably key in on that, so I'm not as confident in today's rally. Yeah, so consumer expectations are really important too, right? Because expectations are what actually drive inflation in general, right? That's a self-fulfilling prophecy, and if people expect inflation to be higher, it will be higher. If they expect inflation to be lower, it will be lower. So I think that's also something that they will be focusing on, and we'll see what Fed ends up doing. AMD right now is just absolutely killing it. 5.5%. It's still making a new high of day, even though other stocks are kind of rolling over. Apple is also very nicely doing well. I mean, Nvidia almost in the same boat as Apple, rolling over a little bit, but still up over 4%. And Amazon up 4%. Tesla's up 3.2%. Let's take a look at Google, 3%. And then Netflix. Netflix been also really, really crazy. So up another 3.75%. And then we've got Microsoft, and that is up 2.4%. So yeah, lots of names here charging through as the dollar comes down, as the yields come down, of course the markets. But again, the momentum to carry forward, I think it's really important that we see a high of day. If you don't see a high of day, I think it's going to be tough for the markets to kind of continue this intraday rally. It's going to be a good gap up. We may trade sideways, we may come down a little bit, but for us to see this rally continue, I think it's important for us to see new high of days. Kevin says, I got Tesla at 179. Okay, Kevin, no need to flex here, okay? No need to start flexing over here with your great 179 price, telling us how much of a discount you got. Next week, hedge funds will be laughing as they add shorts and puts. It's possible, yeah. I mean, you never know with the markets, I mean, it's important for us to kind of recalibrate to this technical. I think it's, if you get up to that resistance and we get rejected, same all over again, right? It's nothing but a bear market rally right now. So this is exactly what we have gone through, and right now we're kind of going through this again. Some short bear market rallies too. Like it's never been like, all great long bear market rallies, but this is also something very similar to what we have already seen. And same thing with the NASDAQ, bear market rally, and NASDAQ hasn't really moved that much as opposed to the S&P 500. So like from our lows, it's moved up 12%, and S&P just seems like it's moved up a lot more. Yeah, it's moved up 15%, which is crazy. And Dow Jones from its lows has moved up 18%. So Dow clearly has, perfectly outperformed the NASDAQ and the S&P 500, and the S&P 500 has outperformed the NASDAQ. So the NASDAQ still has been under a lot of pressure. I mean, it's mostly been traded sideways. It hasn't really gone up that much. Alex says we want to get them as cheap as possible. bargain and discounts. Yeah, that's true. That's exactly what we want. Ankur, so GM, good morning. How were the PPI data? PPI was really good. We got in some great numbers, and that's one of the reasons why the markets are, well, gapping up. I wouldn't call this a rally, but we're definitely gapping up, selling off a little bit intraday. But this right here were the inflation numbers. So came in lower than expected on all 6 accounts. So we have literally just got a very strong bull case for PPI, and the interest rate expectations right now pegged for 50 basis points for next meeting in December, and then another 25 basis points in February. So big move down for interest rate expectations over the last 1 month. But what we're really seeing now, unfortunately, is this rally starting to roll over. We'll find out in about 14 minutes if the markets can continue on this rally here or not. Caddy, are you able to access German stocks? If yes, can you take a quick review of ticker ZALD? Not deep analysis, a few seconds will do, would be of good help. All right, so ZALD, let's take a look at that. Are they listed on the German exchange? Okay, so they're not showing up. ZALD. Huh. Is it ZAL? Because that's the one that's showing up on the German exchange. If I type in ZALD, nothing's coming up. Maybe it's ZAL? I don't know. Is it? Zalando. Never heard of that company though. I've updated to 180 now. We live and learn. I got Tesla at 401. Oof. 401? I don't even think Tesla's got up to 401. Oh, it has. Oh, okay. Oh, okay. 416 is the all-time high for Tesla. I didn't know that. I didn't realize that. It's pretty crazy. Danny says my average on Tesla is under 100. I bought before the first split in 2020. Haven't bought since. Wow, that's incredible. That's great. It's crazy how even after that $100, like under $100 pre-split price from 2020, the gain now is about 100%. Crazy. All right, so NEO, let's take a look. Up 6.3%. So, we talked about this yesterday in our live chat as well. $12, $13 is going to be a bit of resistance there for NEO. Yesterday it was down 3.3%. So we're going to be taking a close look at $12, $13 to see whether it actually does break above that level, or if you get a rejection there once again. Nowhere man, thank you so much. I really appreciate it. Glad you enjoy our community and are part of it. So thank you so much. I really appreciate it. Dustin, thank you. I appreciate that as well. And yes, we are seeing a bit of a retest at that 200 SMA. So I think it should be interesting for us to wait patiently to see where the S&P trades this week. And once we get up there, I think that's where I think it's going to be more of a waiting game just for us to observe and see whether we get a breakout or we get a rejection. If we get a breakout, I think that would be a big trend reversal. I think markets are going to be paying attention to that a lot. Like technicians, that's what they're looking for, is that overall trend line and whether we get a breakout or a rejection there. So VIX never went past 30, so no waterfall. This is really odd. Yeah, volatility just, got up to as much as 34. It's actually coming down off of 34 to 35. We just never got past 40. I think that's what you're mentioning, Gabriel. We did get past 30, we just never got past 40. So entire of 2022, we've got up to as much as 38.85, 37, 36, 35, 35, 34, and then we just started to sell off here. So Deadman Walk-in, what is the ticker symbol? I tried to look at ZALD, but it's not showing up, right? So I found ZAL, but there's no ticker symbol as ZALD. Is it lowercase? Is that I don't even know if it's gonna, yeah, I can't type lowercase at all. So for actually, yeah, it's just showing me ZAL as a ticker symbol. ZALD is nothing, there's nothing showing up. Pre-markets don't really matter because there's no really volume. Yeah, Kevin, that's true. I think the real volume when that starts to kick in when the market opens is going to be far more important than what we're seeing pre-market. Okay, Zalando. All right, let's take a quick look. ZAL, German stock. The market's open for them right now. It's down 2.3%. Okay, it seems like we have looked into this company in the past before. If I have a single line there, feels like we have done some analysis. But let's see. We got good growing revenues. Low margins, so 2% margins. I don't know if it's an e-commerce company or not. What are they doing? Online fashion and lifestyle platform. It offers shoes, apparel, accessories. Okay, that makes sense, right? So right off the bat, if you can see like 2% margins, you can get a good sense of what they're selling, right? It's e-commerce, it's retail, and that's exactly what they're doing. So apparel, accessories, beauty products, fashion, all that stuff. Fashion store, Offspring, all other segments. So low margins, right? Kind of like an Amazon, but for Germany, seems like. But good growing revenues. Margins are low, like I said. Valuations is going to be definitely low, under 1x sales, but over 1,500 times earnings, right? So that's substantially higher right now. Very, very high. And then price to book here, 4.3. Price to cash flow, 25. And then enterprise value, about 22. All the other metrics are good, but when you take a look at the price to earnings at 1,500, that's really high. Current ratio is good, quick ratio is not. So if you take their inventory out, they have some short-term liquidity issues to sort out. And then let's see their balance sheet very quickly. So they got about $175 million of net debt positive, which is not a big deal. Considering that they have $1.7 billion of debt, $175 billion is not that bad. And then free cash flow, pretty inconsistent free cash flow, to be honest. You can see on the last quarter, but growing on the last 3 years here. And then technically, very, very overbought at the moment. So no long trades here for me personally. So RSI, MACD, incredibly overbought at the moment. So I'd be very careful here going long on this stock. In Carvana, $295 per share, AMC 45, and GameStop 175. No way. You're kidding. That's crazy. Carvana's kind of been like a second Wish.com, right? It's gone from 385, 97, 98%. Just brutal sell-offs. All right, so let's see. Will I be okay in Carvana 295, AMC 45, and GameStop 175? So unfortunately, those are three names that I haven't analyzed on a fundamental basis. Like, I don't think I've ever done a video. I've done a video on AMC GameStop, like during the entire saga, like during the short squeeze. This was like, what are we talking here? Like February of 2021? It's been that long, right? It's been over 18 months or something, right? I think this was more like a February of 21 time event, right? So if I come back to when the squeeze was happening. Okay, so May 2021. So right around that time. I'm just kind of losing track of time here. Or it might be around here. Yeah, I think this was the first squeeze. This was, I think, the first squeeze. I think this is when I remember doing just the video, just kind of going over it. But obviously we never talked about the fundamentals or the technicals because this is just not our focus, unfortunately. AMC, GME are just never been. And then Carvana also, I don't think I've ever done a video on them. So unfortunately, I have little to no information about these companies. I have some idea, but for 295, that's a 3,000% gain. Yeah, it's possible, but a very, very low probability outcome, unfortunately. Kelly says you should take a day off and get some sleep because by the looks of things, you don't get some sleep. No, I get plenty of sleep. I think it's just been that I've been jet lagged a little bit this past week since I got back. So I've been having a hard time kind of getting some good sleep at night. But I get good 6 to 8 hours when I'm like, back to the same time zone. I get some good sleep. So I never have issues with those. knock on wood. And sleep is something that's really important. I learned it very early on. So no, I think it might look like this because I just got done with the workout. So I might be just sweaty here. Anyway, so all right, let's see. Danny, love your channel, best financial channel on YouTube by far. Thank you so much. I really appreciate it, Danny. Glad you enjoy the content and really appreciate it. Love you, Caddy Formal, you're a top guy. Thank you. I appreciate that, guys. Let's see, you would add on Google or Amazon positions today. I started a new one last week, but would you after this initial print? I might for both. Yeah, I think that's a good point. I think Google and Amazon, they're both, well, Amazon's trading below the fair value right now at below $100. Well, not anymore after this print, back over $100. And then Google, closer to $91, $92. I ended up actually closing out my cash to put after this thing, started going higher. So in the last few weeks, I've actually closed out my Google cash secured put, my Nvidia cash secured put, my AMD cash secured put, and then Tesla also I might, if it actually continues to rally beyond $200, $215 to $20, because that put is going to get further out of the money. So 3% in the green right now. We'll see where this ends up in a few days going into this week and next week. All right, so we're gonna set up for the markets. We got 3 minutes left for this open, and let's check on our poll. Let's see what everybody's expecting. So lighting, thank you so much. I really appreciate that. I'm just seeing it right now. So I'll do a technical analysis on Tesla here in just a minute. 80% expecting the markets to be green. So, and then 12% expecting the markets to be red and 8% flat. So again, makes a lot of sense considering that we are seeing a very strong rally pre-market ahead of the open, and based on the inflation numbers that we got from PPI. Yeah, it was much clearer when I was using the red mic. That's true because I'm using the default microphone from the MacBook, and there's also a fan going turned on right now in my room. So that's probably why the audio is not great. But anyway, Tesla, we've analyzed this. I've done a video yesterday. Support level is going to be at around 183 for now. So this is going to be that level to pay attention to. We did get some buyers to step in around here, and resistance all the way to 250s for Tesla moving forward. So that's going to be the level to watch. Are we going to see those levels? It really depends very much on the market and how the NASDAQ and S&P ends up trading. But the sentiment is really weak. The technicals are not great. So wouldn't be surprised to see 160s or 150s also for Tesla if we continue to kind of roll over. And who knows, Elon Musk, what is he going to end up doing? If he sells more shares, then, well, good luck. And Tesla's already starting to roll over, right? So there's not been a lot of strength behind Tesla in terms of price action. Zalando is a game changer in e-commerce in EU. I can assure you that. I haven't bought anything outside Zalando for the past 7 years. Yeah, 7 years. That's great. That's incredible. So not even Amazon. You haven't bought anything on Amazon. Do people in EU prefer Zalando over Amazon? Is that what it is? For online e-commerce? All right, folks, we are ready for the open here in about a minute. Time for an unboxing video of the green mic. So, are you swing trading Tesla? Not necessarily, nope. So we're just got a position there, and I'm hedged both ways. Again, did a video on Tesla yesterday, so you can check out what options I'm actually holding on to right now for the next month. They both actually expire on December 16th, so I actually do have a call and a put expiring on the same day. All right, we're gonna end the poll there. We are all set, all ready to go. Do we want to listen to Jim Cramer, what he has to say, or everyone's gonna take a pass on that? What are we thinking here? Do I want to turn this up a little bit, see what he has to say, or? Anyway, so let's get right into it. Pass. All right, so I'm getting mixed views, so no negative November. All right, so we'll just take a pass on that for now. Anyway, so markets open. S&P 500 opening up to 4,020, up over 1.5%. We got the Nasdaq opening up probably closer to 2.5% is my guess. There we go, 2.5%, right in line with that. So 11,474, and the Dow is also open higher, 286 points right now, up over 85 basis points. So again, we'll see what that intraday momentum looks like. If we do catch any bids and the markets start to push through, or if we're going to just see the markets roll over and then start to come down intraday. So we're seeing a lot of momentum here. FNGU up 11%, Alibaba up 10.7, Tencent, JD.com. So Chinese stocks literally just going through the roof here. We're seeing lots of momentum here for Alibaba and of course for Tencent, for JD.com, for XPeng, Baidu, Li Auto. NIO is up over 6%. So lots of momentum for Chinese stocks at the moment. And then we got Fiverr pushing through. We got Okta, Fubo TV, NIO we covered earlier. And then we got Upstart, $21, $22 per share, around those levels. InMode is back up to, wow, InMode's at 38.84. So InMode's almost back up to 40 bucks. Very, very strong moves. It obviously did sell off down to 32%, and from those levels, it's actually rallied 48% now. So very strong move. Tesla, 3.5%. AMD's 5%. Apple, wow, so much consolidation for Apple, right? It's just trading sideways at 152 here. Amazon's at 5%. So here we go. Market's up 2.5% at the moment. All right, all right, all right. Thank you, Anthony. Good morning to you too, and cheers with a coffee as well. No coffee for me right now. It's pretty late, but definitely enjoying some coconut water. All right, so volatility just a little bit under 23.5. Crude oil is getting back up to that resistance at $87. But on the month of November, though, it is down, which is a good thing. That's even more good news for inflation for next month. But it has to stay this way, right? It has to stay lower for the month of November. Yields are still dropping. So the dollar index still down 1%, and the yields are also coming off 1% here. If the yields in the dollar keep dropping lower, then I think there's a possibility we see more upside intraday for the markets. He is an Eagles fan. Just had about 20 alerts go off. That's great. Bob up 11%. Bob the King. My Tesla positions are printing. That's awesome. Square's also on the move. So let's see. Wow, $75 today. Just absolutely incredible. 45% move to the upside for Square, for Block, right? So $74, $75. Just absolutely incredible. So, you know, it's definitely getting up to that resistance. If you have been trading this, if you have taken the trade idea, I would definitely be considering locking in profits here. As you know, the original target really was 89, 90 bucks, but you know, we got to really readjust and see how it's trading. We're definitely getting overbought here as the RSI is getting higher, and we're also approaching that very important resistance for Block. So pretty stable, the market so far. Apple charging through. Obviously, everything is green. Leading with Amazon. Amazon has been strong over the last few days. Amazon and AMD, of course, have been very strong. Dan says, I like that you don't do the Home Alone face in your thumbnails. Never change. What does that mean? Home Alone thumbnail. Home Alone as in the movie? Yeah, I don't think I've. Yeah, what is that Home Alone face? Home Alone, yeah. All right, so Dow pushing through. Yields are rotating back higher a little bit. Let's just run through our entire watch list and start with retail first, and see what's actually pushing through here. So retailers, we got Walmart leading the way, 6% in the green, although it has given up on some of the gains, ever since it opened. Wow, look at that. We did fill this gap. I'll call it. This gap's filled now after the earnings almost entirely. And now it's kind of bouncing off of that 144, 145 support. So it's a very good support here. 150 is going to be that resistance to watch now for Walmart. Obviously, pre-market, we did get up to that level. So 30-minute. Yep, so we did get up to that resistance perfectly, came down, validated that support, and now we're starting to push right back up. So Brandon, I am happy to get a mic, but it's so I'll probably get a green mic this time. But Macy's pushing up 4%, Amazon's up 4% as well. Now this right here is going to be that support at close to 102 for Amazon. So support at $102. We still have a gap to fill for Amazon around here, around these levels. All right, market's starting to roll over here. We'll see if we actually do get new low of days. Actually, NASDAQ is, S&P is not. NASDAQ's really starting to roll over. Yeah, my phone chat is really, really delayed. It's very delayed. Like I'm just seeing messages from like way back. Oh, overexpressed face like all YouTubers. Oh, the shocked face? Oh, okay. I know what you guys mean. Okay. Yeah, I don't think I've ever put my own face on any of the thumbnails, unless of course it's just a regular thumbnail picked up from like the video that I did on addressing FTX in my message. It was just like whatever YouTube picked up randomly. I didn't make a thumbnail for that. Don't get a green mic till I get more Tesla. I don't think the new mic is needed. I cannot tell the difference in sound quality. I guess your Apple computer is super good. It is a little bit weird though. Like obviously it makes a huge difference. When you do listen from the red mic versus this one. So eventually I will. But anyway, retail's done. Going over to semis. How is TSMC doing? 11%, $81. A very strong move. Obviously it's pushed up quite a bit. It's like a big gap to fill on the downside here. So this right here is the gap that TSMC pretty much left after the Buffett effect. Wow, I need to really turn off my chat here. It is literally 9 minutes behind. What? That's crazy. I don't know why that happens, but it's 9 minutes behind. Like I was just getting all the what do you think about Upstart? So Upstart, let's take a quick look. Upstart after the earnings has almost always rallied really well. I mean, after the earnings, it's obviously dropped first 20-25%, and then it has rallied pretty aggressively. So same thing happened this time around, big gap down, and then a 63% rally for Upstart, and now it's just kind of consolidating sideways in that range between $20 and $22. So this has been a level where Upstart's pretty much spent most of the time between $20 and $22. It's just been, consolidating here, like around here, this area. But Upstart's got a lot of challenges, right? So they got negative earnings. Pretty much they generated a loss this past quarter. That's what they reported. miss on earnings, miss on EPS, revenue, excuse me, and the guidance is also not great. So fundamentally, I'm kind of staying away from Upstart. The business is deteriorating substantially. I mean, you can take a look at the quarterly numbers here. You just take a look at the income statement on a quarter-over-quarter basis, right? So let me see if I can bring up, yeah, just the revenue and the net income there. You'll notice how quickly it's deteriorated, right? It was consistently going up, 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 and after the first quarter 22, down, down, right? So 2 really bad quarters, from going from profit to losses, decreasing revenues. So that's being reflected in the price of the stock. So $26 is going to be that resistance near term, support levels in and around $20. But fundamentally, I think they've got some issues to deal with right now. Lawrence has got Upstart at 14, killing it, absolutely killing it. You got TSMC at a great price, Upstart at 14, wow. Arnold says Upstart is now just a CNBC meme from when it was at the top. Yeah, I can't believe that video came out at the perfect time on CNBC. Just absolutely. Man, you know, finance, like markets, just this whole community, the global finance market community sometimes can be so funny. It's hilarious sometimes. You know, there's just so many things that go on. So many things. You just can't make this stuff up. There's just, oh man, there's a lot of drama in this global market community here. And I'm not just talking about YouTube or anything, just like including CNBC, including, you know, Elon Musk and everything that's just happens, Kathy Wood, or like all this whole global community. There's so much happening. But Upstart, I will always remember that interview. It was like, I can't hear what you're saying. I can't hear you. What are you? Bro, you can clearly hear him. That's exactly why you're saying. I think there's a problem with the audio or something. Like he's saying that. It's so funny watching that. It's so awkward too. Like watching it. I know. I'm just laughing thinking about it. Same. It's just. All right, so NASDAQ gaining some momentum back higher. Again, new high of day is really important for us to see some momentum to the upside. I mean, the NASDAQ needs to break above 11,500 in order for this rally, intraday rally, to continue. We'll see if we actually do get that high. And S&P 500 also, a breakout above 4,030, a new high of day would be critical for this rally to continue on an intraday basis. So that's going to be it for today, folks. Thank you so much for joining in. I really, really appreciate it. And make sure that you drop a like and, of course, subscribe to the channel. Excellent PPI numbers coming in. So within the last 1 week, in less than 1 week, less than 7 days pretty much, we've gotten 2 really good prints from inflation, both CPI and PPI. And now all focus is going to be on some more earnings coming out, the retail numbers, the retail sales. And then we're going to shift over to December, when the Federal Reserve kind of meets in now under 30 days to hike rates once again. We do have Fed speeches later this week, so that's also going to be a market-moving event. We're going to hear from Loretta Mester, Neil Kashkari. A lot of people are going to be talking, so those are going to be equally important, if not more, for the market. So thank you so much for joining. I really appreciate it. Make sure that you drop a like and, of course, subscribe to the channel if you're just joining us for the first time. And the link to our Discord Patreon is going to be down below if you're interested in, of course, joining and taking advantage of that 16% discount. You get access to all the buy and sell alerts, options alerts, trade ideas, and of course the fundamental and technical analysis course links also down below. It's the first link down in the description. Hope you all have a great day and happy investing. I'll see you all